Yo, yo, yo. Welcome back to the channel. You thought that I was hiding. You thought Dave, he was wrong about today, and so he was going to just go into hiding. He was going to not make a video today. No. I'm far too arrogant for that, okay? I wanted to share this because I thought it was pretty funny, and I replied to it on Twitter. I said, I don't need this judgment in my life. If you're out shopping today, be nice to retail workers. It's not their fault you waited until Mary's water broke to shop. Because it's literally me. Oh my God, it's literally me. But yeah, every year, dude, I freaking wait until the absolute last second. But I am very nice to retail workers. Hold on. I am very nice to retail workers because I used to work in retail, so I understand what that's like. And so yeah, I just thought it was kind of funny because this is why the video is so late today, is because why is my camera autofocusing like that? Because I was out Christmas shopping, which is probably horrible. I'm like Scrooge or something, or the Grinch. The Scrooge. All right, let's get into the SPY chart and talk about how wrong I was. I guess we can remove all these marks. Most of you guys probably know about all of this stuff at this time, and let's talk about it. So obviously, looking at this here, you can obviously see that there is a bit of a head and shoulders sort of look occurring here now. So I think it's really important that we zoom in and take a look at the potential outcomes that are there. So just like I told you guys, going into today, the plan pretty much remained the same. I did like the way that futures was looking overnight, but obviously what this turned out to be was more like a triple top thing. You broke the uptrend that you had going there in pre-market, and so at open, I was out of calls because my entire thesis was based on holding this uptrend. And I didn't enter puts or anything like that, but obviously we had a cataclysmic sort of event here. And then you eventually bounce here at this 374-ish level, 374.50-ish level. Simba joins the party. So everyone say hi, Simba. Simba, he's a joyous boy. So I mean, the first question that I would have then is, I think I actually was able to locate exactly where this fib was, like why we bounced at this level here. Not the best daily candle, in my opinion. I don't love it. Let's take a look. I'm pretty sure it was this. No, I don't know. There was a fib. I can't remember exactly where the fib was. But anyway, obviously you had a really big bounce here. So what am I thinking? I mean, obviously, I do see this as a redistributive effort, okay, primarily. But I always saw it that way. My entire thesis was based on there being a redistribution up here at these higher levels, right, before continuation downward. What you got was continuation downward. Obviously, you got rejected out of this liquidity zone here. I'll draw it for you. Right? So you got rejected out of this previous upper range that you climbed through, and then you immediately failed. As soon as you jumped back into this range to try and fill this gap, you got rejected back down by this range, okay? So in my mind, like what's happening now is this is clearly a very, like, this is a very important level for bears, okay? Bearish institutions are protecting this line. They do not want to see price go above here, okay? So if price does get above here, then you will see a relatively quick advance, okay, up to fill this gap most likely, because bearish institutions will throw their hands up and they'll wait to reshort at a higher resistance level, okay? So that is a likelihood. The way that we would draw this inverse fib now is from the top of this move here to the bottom of this move here, and if we're going to see continuation, this would be the retracement levels. You can see it lines up perfectly, the gap with the golden pocket here. So this is a nice setup still for the possibility of an upward move, although I will admit that I'm less convicted now than I was if we were able to hold on to that uptrend within this more accumulative structure. This could still play out as an accumulative structure, because what this could be is, so you have like a sell climax type event here, this being your automatic reaction, and then this being your first sell test within this range, okay? And so what you could see occur, and again, this would overall end up being a redistribution, okay? But redistributions are very similar to accumulations in nature. They just fail towards the end. When you're supposed to have a sign of strength, you eventually have a sign of weakness at the end that pushes you back down into a lower trading range. And my camera is still having trouble focusing. I'm really sorry about that. Let me see if I can zoom in. Oh my goodness, you're now you're nice and close to me. I just dropped my phone, just fell out of my pocket. This is way too close. I'm actually uncomfortable with that. Okay. Maybe this is better. High value production we're doing here. Okay. My producer's very proud of me. Excuse me. So what I was saying was redistributions are very similar to accumulations. They look very similar. But whenever you go to have this sign of strength, you ultimately get rejected, and then you get pushed back down. Obviously, I can illustrate this better, but I just ran out of space. But perhaps it goes up here, and then you get pushed down. Okay? So an example of this would be this sort of effort here, right? It looks like an accumulation, and then rejected down. Accumulation, rejected down. So that's just the sort of look that you're looking for there. Doesn't have to be that extended. Doesn't have to be that short, whatever. But that's pretty much how I see that. Also, pretty hard to ignore the generally inverse nature of this entire move. So like you have this move and this move are inverse of each other. This is only relevant for the purposes of just watching, because you can see this sort of inverse play out to where I do see that eventually this does break down. Again, my conviction hasn't changed when it comes to that. I do still eventually see fully breaking down, but I'm still not completely opposed to the idea that you would have a move up, okay? In the short term to 395 to 400. I just think that zone makes a lot of sense to retest, but obviously it's not necessary. What am I doing positionally? I mean, personally, I'm not very optimistic, okay? Like, on a long-term basis, I am very concerned about the market, and most of my concerns actually have more to do with the underlying assets that are within the S&P 500 rather than the S&P 500 itself. When you look at all these larger charts, and we've been talking about Tesla lately a bunch on the channel and way more on Twitter. Let me get rid of this gap word here. Okay. Oh, well, that's stupid because, wait. Okay. I think that's right. Yeah. Okay. But I mean, everything, and obviously Tesla had a ridiculous day. I mean, another insane, like 10% down at one point day. The stock is absolutely getting crushed. So very fortunate if you're in a bearish position on Tesla, you have been having a field day. But I'm seeing, and again, I do see that there is going to be some sort of recovery effort for Tesla. I don't think that it's just going to. I mean, look, I would love it if Tesla just just went straight down. You know, it took a straight nosedive down to like my price target of $25, whatever. I know that that's not realistic. It's not really what I'm expecting, but I mean, everything that you can do here, I mean, this was like, oh yeah, it's looking like it's forming a base or whatever, maybe a fallen wedge. It just dives right through the bottom support trend. This is a dumpster fire, okay? A dumpster fire. So don't be surprised by a bounce, retest this downtrend. But man, when you break down out of a descending support line, I mean, this is a bad signal, dude. I mean, this is bad, okay? This thing is in really bad shape, okay? I am actually hoping that it pumps. I'm hoping that it has an effort to the upside to redistribute because I want more. Personally, I want more shorts. I want more puts. I'm actually sad that it's happened this fast. I like to average in the positions, and you know, it just feels like it's running away from me. Oh man, Tesla. But another thing, QQQ. This is another huge concern that I have for the market. You have this long-term trend line from the bottom. Double bottom. Oh my goodness, that was brutal. Double bottom in 09. Touch of the COVID bottom. You're coming down to test this thing again. If you fail this trend line, and I think actually at one point you were below it. If you draw it correctly. Jeez, Dave, draw your freaking trend line correctly, dude. I think you poked down below it at one point today. It doesn't really matter. This obviously looks like a distribution effort. It obviously looks like it wants to round out and get sent down here to 235 or so. This is going to be a cataclysmic event for SPY, okay? Like, when this downtrend gets broken, I mean this uptrend, I'm sorry, gets broken, it's a little late. I'm a little, and you're going to see within a few weeks, you're going to see a 10% move down on QQQ. It's going to absolutely crush souls on SPY, in my opinion, okay? I mean, it's the type of thing where, you know, you get sent down here and you're testing this bottoming trend here again. And if you fail this, then you're getting sent through. We've said that over and over again. You still haven't tested this bottom green trend. This historic bottoming trend back here from the last bottom that we had. So when that does happen, it's going to be incredibly painful. And to be honest with you, the retracement thus far within this market has not been that steep. I mean, if you really think about it, the absolute bottom that you had for SPY back here, you're only down 28%. In the relative history of, large, bear market, like major bear markets, you've had a 50% retracement and a 55% retracement. That's just on the SPY chart, the .com bubble and the 08 bubble. I think you have a tech bubble. I really do. I think that QQQ is going to start to really show a lot of weakness here in the relative near term. That's just my opinion, not financial advice. And I think that general weakness, because tech has tech has been overvalued for a long time. The point that I was getting back to is big players like Apple, Microsoft, Amazon, they all have terrible charts. I mean, they all look like they're just hanging on. You know, they all look like they're getting distributed. None of them have any semblance. There's no sign of accumulation on this Apple chart. It's just not there. Everything is McDonald's arches. Everything is, keeping the dog in the fight. This chart looks like Tesla, right? Before this big splash down that we've had, it's developing just like Tesla, right? So let me show you what I mean. And look, just because it looks the same doesn't mean that it's going to play out the same. But I'm sure that you're seeing the similarity here. This thing is just hanging. It's just hanging out, man. This is not bullish. This is not reaccumulation. It's not hanging low within the range. It's just sitting here and getting sell walled slowly. Slowly, the sell wall is moving down. Oh, look, this is all-time highs. Beautiful, great. Right? Now we move it down here. Okay? You're going to break through this liquidity zone. You're going to get sent down hard like this, and then this is going to be your new wall that you're not going to be able to break through. And when you fail here, you're going to get sent down again. And it can take time, but this is not, in my opinion, again, I'm just a guy, okay? And I'm not a smart guy. You saw I was wrong on this call. And this video is kind of all over the place, but I just my general feeling about the market is not oh my goodness. Is this really a midline test? No way. Hold on. No. I was about to say, that would be insane. That would, on the daily, it kind of looked good, though. It did look like a midline test, didn't it? Let's see. No. That was weird. The time frame change had it, where it, perfectly bounced right there. Anyway, I just wanted to let people know, because I know that I was doing a locally bullish thing. And I'm not saying that move is still impossible. I'm not saying it's impossible at all, actually. Look, I think that institutions are trying to get this shit off their books. Because I do think that there is a major downturn. This is probably as bearish as I've been. Probably in this entire. I mean, I knew that this was the market top. I knew that up here in this 490, 480-ish range. Especially whenever all that COVID stuff was still going on, and the price was just still getting marked up, and there were other things that were happening at the time. I can't remember exactly what the fundamental events were, but everything just seemed so bad, and the price was just climbing, and I was just like, this is it, dude. I was like, this is the top of the market. There's no doubt. Also, the main thing was, I'm pretty sure it might have been this. I was just seeing this rising wedge look or whatever, and I don't remember exactly what it was, but I was just like, I was like, yeah, dude, this thing is this is bad. And then, yeah, but other than that time, I mean, I kind of knew that we were gonna. I was very bearish throughout this entire time. Other than when we would get to the relative bottom, I'd be like, yo, we could see a rally to 430. Definitely called for that rally once we cracked over this 390-ish level. I was like, yo, we're probably running a 430. And that was based off of the 707 fib, and the downtrend test, as we've discussed on the channel before. Here. Ish. It was like this. The return of my cough. It's gaining strength here late in the night. Yeah, so I know the video's all over the place. I've been talking for 20 minutes. Kind of scrambling around a little bit here. What I would expect is, I mean, really, I'm just to finalize things, I'm expecting it to be a little choppy. Maybe you pop up here again. Perhaps test a 0.5 fib. I don't think you got up to a 0.5 on this. Yeah, there you go, 0.5 fib. Maybe you round out here around 392. You could push a little higher, but overall, I think that the effort is going to end up being redistributive, just like I did before. I don't think it'll be this drawn out, to be honest with you. We're just on a relatively high time frame, so it dragged me out all the way to March. The look is probably going to be a little bit more consolidated because I am expecting. So here you go. Here's a timeline. And I'm not saying this so that you can go out and buy options. Okay, this is not. I'm not giving you a timeline. I'm giving you a timeline simply from a technical aspect. What I'm expecting and why. I'll tell you why I'm expecting it as well. So we have this fib here, and I am expecting. Let me remove these lines. We don't need them right now. I'm expecting that you have a test of the midline that is correlated with a key Fibonacci at some point. Oh. What is going on with my midline tonight, dude? This thing is freaking a party animal, dude. Anyway, I can't really line it up right now. I don't. Maybe the timeline is past. I'm not entirely sure. Wow, that's really unfortunate if that's the case, because then my timeline and my test range would be around here in April. So perhaps it does get drawn out, huh? Oh, yikes! That would be really brutal, wouldn't it, if it took that long? But yeah, I suppose that my next kind of target area would be this. So when you have these trend lines that converge in this way, like we know the midline is important. We've seen it be important over and over again. It was very important in our ability to call for the bull rally, as well as these rejections back here, right? But the reason that the crossing of these trends, especially when you combine it with fib or key levels, so let's go back and see if this is a key liquidity zone historically. Yep. So you have a rejection back here in July of 2020. It's also probably a macro Fibonacci, to be honest with you. That's really what we should be looking at right now, isn't it? Isn't it? I sound like British when I say shit like that. Oh yeah. Yeah. So this 0.5, yeah, this is okay. Perhaps I'll cover this, like, at least briefly in every video going forward, as my, like, macro kind of target. But yeah, so somewhere in this 323 to 328 range by early April is pretty much my expectation. The reason that this sort of analysis works, and perhaps you... Well, to be honest with you, I'm pretty sure actually that the fib worked better. Hold on. Yeah, the fib worked better like this. So yeah, anyway, it's around the same range. So anywhere from this like 320 to 335-ish range. The reason that this works is because trend lines are traded algorithmically. And so they're treated by algorithms as key support and resistance, the same way that horizontal liquidity is treated, right? And so what happens is these big players, they have buy and sell walls based on trend lines. And what happens is when you have a key level that's combined, that has liquidity, that's combined with these trend lines that have diagonal liquidity, the correlation of those things can act as a magnet because that liquidity tends to want to be retested. Okay, and let's see if that's also a volume level, a VP level. Actually, yes. So once you break down, and fail this like 365-ish level here, you go into this pocket. And your next shelf would be like 336. So what I'm saying is, you know, this sort of move here, maybe you reaccumulate, press down, you bounce around this 336 before you test here, and then we'll see what happens from there. So that would pretty much be the logic of the market. If you fail this teal trend and you fail this midline, then you are going crazy, okay? That is probably not the best. That would be an absolutely brutal occurrence, but it actually would make quite a bit of sense from a Fibonacci standpoint, correlating with this support trend back here. So these are the things to look out for. I am not bullish, okay? I will have my mind changed. I've said it over and over and over again. When you break through and then you hold this resistance line as support, and you make a new high, I will be like bullish. Like bullish as in like bull market, as in potential new highs again, as in potential. Until then, the updates will be rather local, right? So like you will still see me come here, and like if we come down here, test this midline, I'm most likely going to say, hey, you know, I'm looking for an upwards move short term. But on a more macro basis, I am expecting lower lows. And today was a big confirmation of that, in my opinion. The way that we just broke through that uptrend was not a good signal for me. Regardless, I was bearish after the move anyway, but that break today was not a healthy one, in my opinion. So that's the video. I've talked way too much. It's late. I want to go to bed. I'm going to wake up early, go to the gym tomorrow. Got a lot of work to do tomorrow, so I might not be as active on Twitter and shit. But be on the lookout there. I'm sure I'll share my thoughts throughout the day. I always do. But yeah, that's pretty much the video. And until next time, peace. Go bother Crystal Assassin. Go to that tweet and like make a joke or something. Say something funny. All right, peace.